How are you doing? The Japanese government is considering setting the minimum burden rate to income tax for those who receive more than 3 billion yen annually and deduct 330 million yen from total income amount and calculate the rest of income with 22.5% tax rates. And if the rest of value exceeds the usual normal income tax rate, the government will also collect difference between them. So the government is adjusting minimum burden rate in annual tax revision in 2023, but we cannot help suspecting this tax policy. So in the first place, stock dividend is income after a payment of corporate tax. And a stock price that reflects the performance of a company after tax deduction reflect the corporate value after the payment of corporate tax. And taxation against stock dividend and capital gain are subject to double taxation, right? So what I really problematize the most in terms of this taxation policy by the Japanese government is that Japan will give negative impression as a country that doesn't respect people earning money with huge effort to the world. You know what I mean? So Japan's tax rate imposing to wealthy class is already the highest level in the world, especially compared to Singapore or the United States. So raising tax rate to wealthy class people means that it allows them, including talented people, to decide to get out of this country. So this taxation policy is one of the worst taxation ever that the government tries to enforce disciplinary taxation to people who largely contribute to Japanese economy through business on the basis of Japan's socialism and totalitarianism. So Japan's maximum income tax rate, including recent taxes, is currently 55%. And Japan's maximum inheritance tax rate is also 55%. So in short, you can get only 45% of income you earn, and if if the payment of 55% inheritance tax is imposed to your asset after your death, all money left to you and all money left to your relatives, your family, is only 20.25%. So this is not really different from maximum 80% tax imposition from the government. So moreover, exit tax is one of the biggest obstacles that prevent people who can be active, who can be active globally in the world from going overseas. So exit tax is a taxation system that if you possess securities worth over 100 million yen when you go overseas from Japan, income tax is imposed to appraisal gain, seeing that there is a assigned nation. So the taxation system also applies to foreigners living in Japan as well, who will go overseas for more than 5 years from Japan. And for foreigners living in Japan for a long time, this is a really bad taxation system because asset that they already have, the asset that they already have before working for a Japanese company is subject to taxation, so that they need to pay this tax when they return back from overseas to Japan after 5 years. So if foreigners think this taxation is really unreasonable, they will definitely hesitate to leave the choice to work, hesitate to leave the choice to work in Japan because there's no reason that the talented people take trouble to come all the way to Japan for work in order to pay expensive tax for the Japanese government, although they are not Japanese. So in the United States, there's a similar problem in the United States. Uh, there is a social phenomenon called brain drain in California in the United States that talented people get out of the California because the influence of the too expensive taxation. By this influence, towns in California comes to be devastated. So, in case of Japan, this phenomenon will happen at the nation level. So, people's financial assets can be seen as Japan's large assets. So, if Japanese asset holders escape from Japan to overseas, um, talented people hesitate to work in Japan, and this situation directly influences stock prices with bad negative effect. And investors are also prepared to escape from Japan as well. So, however, if the government declined the tax rates, there may be a slight chance that people and money will come back to Japan again. And there is a possibility that the Japanese companies related to Web3 companies that were established in Singapore may come back to Japan. And this will probably flourish Japanese economy. And this will help tax revenue to increase as a result when we see this situation from mid to long term tax revenue.